Are you a young investor looking to grow your wealth while minimizing risk? Today, we'll dive into XLG, the Invesco S&P 500 Top 50 ETF, a powerful investment tool for those seeking exposure to the biggest players in the U.S. economy. XLG is an exchange-traded fund that tracks the performance of the S&P 500 Top 50 Index. It's designed to give investors access to the 50 largest companies by market capitalization within the S&P 500, companies that dominate their industries. The goal of XLG is simple: to provide exposure to the largest and most stable U.S. companies. With a highly concentrated portfolio of blue-chip stocks, this ETF is all about long-term growth, with less volatility compared to smaller companies. XLG focuses on mega-cap companies from various sectors, with a significant allocation to technology, followed by healthcare and consumer discretionary. These sectors represent innovation and consumer-driven growth in the U.S. economy. Some of the largest positions in XLG include household names like Apple, Microsoft, Amazon, Alphabet, and Nvidia. These companies are industry leaders, offering stable revenue streams and market dominance. XLG offers several benefits. It provides exposure to the most stable U.S. companies, diversifies your portfolio within the large cap segment, and offers the potential for steady long-term growth with relatively lower volatility. However, no investment is without risks. XLG's focus on only 50 companies means high concentration risk. It's also heavily reliant on technology stocks, making it vulnerable to sector downturns. XLG is passively managed, meaning it aims to replicate the performance of the S&P 500 Top 50 Index. With a competitive expense ratio, it's a cost-effective way to invest in the largest U.S. companies. The ETF also offers dividends based on payouts from the underlying companies. While the yield may not be as high as some other funds, it adds an additional layer of stability to your investment. XLG could be an excellent choice for new investors who value stability and want exposure to some of the most dominant companies in the U.S. It's perfect for a long-term strategy, but remember to balance it with other investments to manage risk. Thanks for tuning in. If you found this video helpful, don't forget to like and subscribe for more tips on building your financial future. See you in the next video.